As we enter the fourth industrial revolution, each year there's going to be a higher and higher demand for computer chip stocks. And there's an absolute global shortage of computer chips because every single industry needs them. I mean, everything needs computer chips now. You go into computers themselves, obviously. You got airplanes, video games, cars, the 5G technology, artificial intelligence. They want cars to be driverless and run on batteries now. You got all robots becoming more and more prevalent every year. Home appliances, refrigerators, washers, they're basically computers. The whole home, the smart home, the homes of the future are basically going to be run by a computer in one way or another. You got solar power panels. Everything needs a computer chip. More and more satellites up into space. There's almost nothing you can touch that won't need a computer chip this decade. So there's a shortage. I mean, look here how the Detroit automakers and even Volkswagen saying they're going to have to shut down some assembly lines until they can get their hands on enough computer chips because the whole dashboard of every car is a computer now. Intel over here says they're going to spend 20 billion now to build two more factories to ramp up their computer chip manufacturing. The federal government's going to invest, or Joe Biden wants to get a bill through Congress to fund these computer chip companies to ramp up their computer chip making. So the government's getting involved because this can be a global crisis if the manufacturing doesn't get ramped up soon. But with all crisis, there's opportunity. There's opportunity for a lot of money to be made. These semiconductors stocks have made a lot of millionaires over the last decade. And let's look at a few of the companies that are known to be some of the biggest, most profitable semiconductor stocks. We have Intel, Broadcom, Texas Instruments, NVIDIA, Qualcomm. They do a lot of 5G chips. You know, NVIDIA does a lot of video game graphic chips, along with artificial intelligence and AI. They're helping out with the driverless cars. Texas Instruments, household name. Intel, in almost half of the computers made. So these are some of the big boys that this fund holds. You know, for some people, they don't want to pick just one stock. They'd just rather buy a basket of them. Um, the SOXL, this is a triple leverage, a little bit more riskier, high risk, high reward fund because of the infused leverage. This is only for people with a very strong stomach for volatility. Let's look at a chart of the SOXL. This is the one I have because I invest in because I have a stronger stomach for volatility because I've been trading for so long, but I'm really I don't want to trade this one anymore. I just want to hold it for the next few years because they just had a split. It was up to like 600 or $600. So they split the stock in 15 parts to bring the price down so more the price would be more palatable for people to buy into. But yeah, I bought it. I've been trading in and out of this particular fund for many years, probably last 5 years, in and out, a little bit. Most recently, I bought it during that pandemic drop last spring. It went. I bought it. I didn't get it right here at the bottom, but I bought it on the way up, around $10 a share, $8 a share. Sold it around 25 bucks. It kept going up. Now it looks like it hit a little peak. They're doing a little profit taking. They're taking a little bit of profits because hey, it went up over 1,000, around 1,000% in 1 year. I mean, who wouldn't take those profits? 10x your money in 1 year. But even though the stock is pretty high, it's looking a little risky right now because of the valuation, because it's high. But I'm a little on the fence because the demand, the overall, the fundamentals are just have never been better. But even though the fundamentals are great, the demand is high. If something happened in the market, some macro event that has nothing to do with computer chips, could still infuse weakness in the short term. In the long run, this thing is definitely going back up $200, $300 a share in the next 1 to 3 years. I'm very confident on that. That's my prediction. But the short term is a little dicey. It could drop because it's triple leveraged. It could drop down to $10 area in the short run. But if that happened, I would definitely see that as a buying opportunity just to get as much as possible, get thousands of shares. Um, but definitely, yeah, I'm really into the computer chip industry. Very, very bullish long term. Now, for people who have a little bit less risk tolerance, they don't like all the wild swings of the SOXL, the SOXX, the SOX. It's not triple weighted, it's not triple leveraged. So the swings are a little bit, it's more of an easy ride up. And we can see they hold the same companies. And we can just see from 2013, just continued upward profits. But like I say, there could be some short term weakness. I don't like the technicals as they are very, these charts are very high short term. But the fundamentals are great long term. I must emphasize that. But let me know what you think. Let me know what are your ideas about investing in semiconductor stocks, and what are your predictions long term and short term? Happy trading. I wish nothing but big profits for you in the future. Never give up on getting rich. And that's the bottom line. This is Mark Hill, wealthmotivation.com.